if it's a super strong stock, they're just better off with their bid in there, buying as much as they can. That's why you see it so strong there. So as you said with Fastly, we have 3 or 4 days after that earnings report. It runs and runs, and then it undergoes some some regular profit taking. So that profit taking occurs on lighter volume as well, which is the pattern we want to see, up on big volume, lighter volume on the pullback to the key level, and it touches that VWAP and closes on it one day, gaps lower a little bit the next day, and then recovers, and then that's the low of that pullback. Well, what happened in there was they drove it down to that VWAP. They probably even, it wouldn't surprise me if they said, let's short 50,000 shares in the pre-market. Let's drop this stock down and really scare some people. And like I said, we'll short 50,000. We'll get long 250. So we maybe make 5 cents on our short, but we're now 200,000 ahead on this order because we're going to keep buying this stock for the next 6 weeks. And that's why it wasn't until, 6 weeks later that the volume weighted average price was tested again in there. And same thing, we saw a little bit of movement around there. The trend's a little bit more mature, so we can't expect it to hold as perfectly. There's different groups now in this stock. So it's not just the pure VWAP from the earnings. So you've got, different VWAP participants as well. The VWAP short sellers who are saying, hey, it just dropped from 35 to 22. Let's put in a VWAP order to cover.
Right. And in this example that we've talked about anchoring the VWAP from the earnings report, that significant event. I want to bring it back a little bit. So if there's folks who are completely new to the concept, they can follow along with us. So what is anchored volume weighted average price? And we've talked about volume weighted average price. We've just mentioned an application of anchoring it to a key event, the earnings report. You mentioned the year-to-date volume weighted average price as well. Could you define for us simply what is anchored VWAP? What is that to you? How would you define it? How would you explain it to somebody who's maybe never heard the concept before?
The anchored VWAP is anything other than the start of the new day. So the new day. So if you're a day trader and the stock has a real volatile run, it runs 10% in the morning, hits a high, pulls back 3%, well, put an anchor on that high, and you'll see once it recovers back above that, it might bump up against it a couple times and breaks back above that. Well, that's an anchored from the high that occurred 2 hours ago. More traditionally, for instance, for the institutions who want to build a big position and are comfortable buying a long-term position in a stock, they're going to say, we want to buy this stock for the next 10 weeks. We love their earnings. We think this stock's on fire. It's in the right group. Everything's going, but we don't want to just chase this thing. But if it pulls back to their VWAP, we want to be a net buyer in there. So buy as much as you can.